Good morning. What's up, guys? How we doing? It's a big day here today. There's a lot going on throughout the day today, so we got to be ready. Let's see what we can put together here for the middle of the week. So, business first as usual. 9:30 Central, we get EIA crude oil inventories. That should cause maybe 2 minutes of volatility at most. Now, at noon, there's a White House press briefing. So we'll keep an eye out for any tariff headlines coming around noon. But by then, we'll probably be off stream already. That's a little later in the day. 1 o'clock, today's FOMC day. Okay, the interest rate decision hits at 1. All right, and then Powell speaks at 1:30. So, those of you guys who are trading Take Profit Trader or any of the ones that don't allow you to trade news, you're not going to want to be trading at 1 o'clock Central Time, okay? Adjust for your time zone, obviously. But you wouldn't want to be trading that anyway because big news events like that are 50-50. They get priced in extremely efficiently, and they are 50-50 unless you have some kind of information that the world doesn't, which we don't, okay? So that's what's going on here today. So for our session here, for the first few hours off the open, we're pretty free and clear aside from the EIA crude oil inventories at 9:30. All right, so we are a little over a minute and a half out here from the opening bell. Let's take a look at the market inertia. So you guys can see that volatility in the last 3 trading days has really slowed. Okay, we're looking at the daily chart, bottom of your screen. Volatility has slowed, the range is tighter, there's some wicks on the bars, the actual bull bodies are small, which tells us range days, which if you think back to the streams the last 3 trading days, is exactly what they have been. Okay, so been able to, what was it? Monday was a no trade day on stream. I took one little scalp in the afternoon, ended small green. Yesterday was a like 0.6R green day. The final P&L was like 1,700 something bucks, if I remember correctly. So let's see what we can put together today. Maybe we can get something going here today. All right, but again, can't be betting on breakouts that have a low probability of coming unless the market shows an obvious shift. All right, we are 30 seconds out here from the bell. Good morning, guys. How we doing? Old School Maury Lee, Starbuck, Day Trade Tom. Welcome back, guys. How we all doing? Christian Mitz, Bricko, Rick. Good morning. Marshall, how we doing? Javaz, Jet, good morning, how you doing? Gibbs, welcome back. Scooby-Doo, what's up, my man? Superfly, Juan, what's up? Sandra, Dan, good morning. Welcome back, guys, how we doing? Michael, how you doing? Jude, good morning. All the regulars, back at it. Well, there is the opening bell. Look at this. Look at this. We are back to the break-even point on the Nasdaq, testing it right now. There's 0% on the day. Now, these break-even points have proven to be an issue the past 3-4 weeks. 20,000 is, of course, an S-tier level. We're 130 points away from that right now. So, I'm going to voice a, not concern, but just something I'm thinking about here today. I got to tell you, I really hope we don't get pinned between 20,000 and like 19,870, which is the break-even point on the day. If we form a big wide range in between those two, that's like 100, 125 points. That's fine. We could make something happen there, but ideally I would love to see us just break above 20 and run, form a range up there. But really, more ideally, if I could have it my way, I'd love to see this thing just push downside and have a day full of nice, clean channels, nice, clean continuation setups, and higher volatility to smooth out what we've been seeing. Because think about this, guys. We've been seeing a little bit of tighter volatility the last few days, right? But what we get is these random little headlines that have anything to do with tariffs, because we're still sensitive to the tariff topic. It hasn't really lost interest yet. It will over time. Same way that, you know, inflation kind of did 2022 into the following year. But anything with tariffs is causing big, big news wicks. And it's causing some problems. We saw a lot of that yesterday. And a lot of people are getting hurt, especially if you're not using live stops. So again, if you're newer here, in this market environment, I encourage you very much so, use live stop orders. Okay, if you trade naked in a normal market, that's fine. I have no problem with that. Trading is a lot more fluid than a lot of people like to talk about, like to think. If you can make the numbers work, who's to tell you you're doing anything wrong? But live stop orders right now, I think, are a great way to protect your month, if not your year. Because we are seeing some crazy wicks lately. Lure to Fuse, higher high. Savant, Aaron, good morning, guys. What's up? Quicksilver's back. Panther is back. Kevin, how we doing? All right, we're getting a big wick up out of that hole. Let's see if we head up toward 20K. Honestly, the volatility here off the open, if we take a look at ATR up top. That opening candle with the big upside wick, that tells us the bulls aren't having it, right? Bears try to push it down, bulls take it back up, but these are mostly institutional orders. Keep that in mind. The range on that was 49.5. Now, I'm trying to remember. I usually remember these things pretty well. I think yesterday's range was quite a bit lower than that. The opening bar range. Because we were comparing it to last week, and we had a day last week where the opening range was like 46, and that was a little lower than what we had seen, but it was still okay. So nearly a 50 range here this morning off the open. It's not huge at all, but we can work with that. We can work with that. That blue flag at the bottom, again, that's the average range across the last 10 2-minute bars, so that's going to be lower because we're still averaging in pre-market bars. Once we get 10 2-minute bars into the day, then that ATR starts to become more and more meaningful. Rick says yesterday was 40 points. Okay, thank you for refreshing my memory, Rick. Today's nearly 50, so not too bad. Let's see if we can hold up that volatility. Now again, for me, I'd love to just get below this break-even point on the day. I mean, you look here. We're 15 points away, 25 points away from the break-even point on the day as far as the Nasdaq is concerned. I'd love to just grind this thing lower and get out of there, because if we stay above break-even but below 20K, it's a really obvious channel. Now, we can make something happen in there, but it would just be easier to break downside as far as a trading mindset. Rock and rolla, good morning. Scrumptious, how we doing? Welcome back, everybody. Now, again, if you are just joining us, which I know quite a few of you are, today's FOMC day, 1 p.m. Central Time. Keep an eye out. I will be avoiding that entirely as far as trading. The way that I approach these is I usually stop trading like 15 minutes, unless volatility starts getting really crazy, but I usually am done. I'm not putting anything new on by like 12:45 Central heading into FOMC. And then I hold out after the release. I wait for Powell to stop talking, which he starts talking 30 minutes after it comes out. And then usually I wait at least 15 minutes after Powell starts talking. And by then, he has typically said the most important things, and the market's like shakes have been put to rest, and the volatility has come in and kind of slowed. So we start getting a little bit back to normal. So in all reality, from stopping trading, at least for me, to kind of giving myself permission to start again, it's 1 hour. I mean, we're talking 12:45 to 1:45-ish, as long as volatility allows. So what's the big deal? Go for a walk, go eat lunch. Really not that big of a deal, but I wouldn't be sitting here taking bets on FOMC. Totally 50-50. All right, we are getting hung up here at break even. Again, break even point on the day is, I'll get you an exact number here, is 19,875.50. Well, that's yesterday's New York session close, so it's in that region. I just got to wait a few bars, let these institutional orders clear out. I'm not interested in taking bets when they're making bets 3 weeks out, right? Days, weeks, months out. We'll give it a few more 2-minute bars and we'll be good to go. Well, definitely a few stops are going to be getting loaded up. Not a ton. Maybe good for a 5-10 point push if we can break these stops down here. Those are just getting set kind of off the open. Yeah, I think a breakdown side of 66 would be good for at least 5-10 point push. Doesn't mean it'll continue lower, but just the instant of all those orders, those stops down there getting triggered. Right now, the bulls are trying to hold that. Brandon, good morning. Welcome back. Jamie, Dale, how we doing, guys? Any of you guys hit the Apex evals yesterday? They are currently 80% off with code BIG, single day pass. So I had a few extra minutes in the afternoon yesterday. I went ahead, I added a 150K. Scaling up slowly. And scaling horizontally is the way to go. Mio got some. Scrumptious, I got 125K. Higher High got more Apex accounts with code BIG. Yeah, bulls are really trying to defend the break-even point, that low a day so far today. That's just below break-even on the day. Bulls are trying to hold not only the low, but also the break-even point, obviously. So again, with 20K up there, less than 150 points away from the break-even point, I would love this market to just go red and kind of bleed. But, you know, I honestly, with FOMC at 1 o'clock, a lot of times what we see is a range-bound market heading into there. Because a lot of the pricing in gets done a little earlier. And then you kind of see a lot of bouncing back and forth, honestly, a lot of times heading into that. Doesn't have to. But by the way, a range-bound market does not have to be sideways. It can be slightly ascending. It can be slightly descending. A range-bound market really is more of a market inertia thing. Like bottom of your screen, that daily chart. This is clearly a ranging market. Small little bull bodies, or small bodies in general, with wicks kind of all over the place, even on the daily bars. And again, those are just showing the New York session, so even more so here. All right, 8:41. We are a couple of minutes out from being ready to go. Now, again, first news event really is EIA crude oil hits at 9:30 Central. That's really the only data release until FOMC. Again, there's a White House press briefing at noon. Higher high. Nico, what do you think about the Apex static account? I like the static accounts. I forget how many. I have maybe 4 or 5 static accounts right now out of all my Apexes. I like the static accounts. Now, the reality is you have to scale those a bit more slowly. But you can probably get bigger in them eventually if you want to. I think a lot of people think the statics are maybe harder to pass. Which, maybe they're harder to pass than like a 50 count. A 50K account is not that big of a deal to pass the eval. The statics, I think they're not too difficult if you're willing to start really small in the eval. You start really small, and then you can press harder and harder. Again, I still trade them aggressively, but you have to start smaller, and then since it's static, you can scale the closer you get to target. So it's kind of the opposite. I trade the static evals the opposite of the regular evals. I scale into the target on static, and I scale back heading into the target on the normal. Static means the drawdown doesn't move. It stays put. All right, at really the close of this bar, we can start looking for setups here because institutional orders have pretty much cleared within, well, pretty much at this point of the day. So clearly forming a bit of a little widening range here. If anyone's having stream problems, it's on your end. I'm perfect. I'm using Ethernet. Everything is perfect on my end. So, I'm gonna refresh. Simple Trader, just question. What do you mean day pass for Apex? Do we get funded in day 1? You pass eval requirement in 1 day? Yeah, for single day pass at Apex, it means that you don't have to pass in 1 day. You can take as long as you want, though there is the monthly fee. But, I mean, a month in an eval. Especially, like, long-term, if you have a business model written out, like, come on. But, single day pass means if you want to push hard, you can pass in 3 seconds. Not that I mean, I just use that as an example to make it clear. You can pass in a single day and be funded the next day. All right, we are into 845 territory. So I am watching this new channel. Now the little ascending resistance coming from pre-market, I really only like to look at after the bell levels when creating levels. But it takes a back seat, but I know it's there. Really looking at this, right? Simple Trader on Apex's website, it says 7 days. That's why I am confused. All you got to do is use a code. Use code BIG, which is my code, or you can use someone else's code, whatever. And that allows you to pass in 1 day. Troutman, what are FOMC expectations? Do you think he's going to cut? Well, the expectation is 4.5. And I got to tell you, at this point, right now, there was reason to care in 2022, 2023, and even a lot of 2024. Right now, I don't care what he does. I don't care at all. I don't think it's even worth the mental capital to try to figure out what they're going to do, because it's going to be 50-50 regardless of what he does. Or what they do, not really what he does. Peter, good morning. How we doing? Look at these big moves. This is the kind of thing, you know, you can see these moves 100 plus points. Not here, of course, but you can see that. On random news headlines, gotta be careful. Live stops. Higher high. How much would you risk for a 650 drawdown static account per trade? I read somewhere that one can risk as much as 25% of the 650. Well, are you talking about Apex? With Apex, I think the static account original drawdown, I think it's 675. It's either 625 or 675, I forget. But it's 30%. So yeah, you got to start small. I would risk probably no more to start than... When I started with my static funded accounts, I was trading 1 micro until I got up out of the hole a little bit, and then I went to 2, then 3. 1 micro would be an average of like $80. So you're looking at, you know, I don't know, 13%. What is that? I think it's 675. Yeah, 12%. Now you got me curious. Are the Apex statics, are they 625 or 675? Not that it really matters too much, but 625. 625 is the static drawdown, yeah. So yeah, 13%. If I start with $80 risk per trade, you dig up out of the hole, you scale to 2, then 3, and you can keep scaling from there if you want, or you can just stay at like 3. Micros, that is, by the way. I know a lot of you guys are thinking minis. You're like, whoa, 3 minis. I think the static accounts max you out at 2 minis. Yeah, 2 minis. 20 micros is the max on the static. Which, by the way, that's a big reason why a lot of people don't go with the statics. And this is a huge problem in the prop trading space to begin with, because a lot of people... You have to understand, if I could just go and trade a bunch of minis for the sole purpose of trying to post some massive P&L, that's cool and all, but that's not a good way to teach how to do things. You're just leading people to blowing up for the sake of your own ego, which I think is immature, hilarious, and ridiculous. Also kind of wrong in a way. I mean, if people are trusting you to show them what you did, that, hey, this has been working for me, but you're more concerned with posting a big P&L, which, by the way, again, is great if you're scaling horizontally and doing what I see is the right way. But to get like 3 Apex accounts and just trade the max amount of minis, and it's like, look at how much money I made today. You can do it too. It is stupid. It's not trading. It's just straight up gambling and posting it on social media. So I prefer to stay small. I mean, a lot of people don't go with the statics because they max you out at 2 minis, and that seems like a waste of money, right? Well, 2 minis that's plenty. You can't even trade more than 1 mini in a 300K account, in my opinion. So the amount that they let you trade, to me, is a moot point. It's completely... It doesn't matter. I think it's a marketing tactic. Like, all of the 300Ks, you can trade 35 minis. I mean, sure, if you want to go the route of scaling and having huge padding in the account and then trading 35 minis, I think that's fine. Just a different business model, but then we're on the other side of things. Like, that is your money that you could request payouts on, unless you're dealing with still breaking rules, which a lot of people who scale that way are, which is why they have to keep trading. To get like the 8 trading days or the consistency rule or things like that. But that's your money that you are on purpose leaving in the hands of a company rather than your own hands. I don't see why you would do that. That doesn't make sense to me. Well, this is a sideways range here, so I'm waiting for this to break one way or the other, because it's expanding in both directions, and what you end up with is a descending support and an ascending resistance, which you guys have heard me say so many times, that shorting an ascending resistance is lower probability than shorting a descending resistance, and buying a descending support is lower probability than buying an ascending support. Here, you have both lower probability scenarios, so I need to wait for either a better continuation setup, because that middle bar there was kind of ugly, The following bar was a bit outsized. I need a cleaner continuation setup, or I need this to pick a little bit of a direction, whether it's ascending or descending inside of the channel, and put in a cleaner entry region. Again, an ascending support or a descending resistance with multiple touch points. Dromisha, been practicing trading ranges this week after asking about it last week. Definitely helping add to my skills. Had a successful range trade yesterday. Cool. Good work. How long do you normally wait for a daily range to form before feeling comfortable seeing your entry and exit range? Just 3 touch points. That's what I'm looking for. I'm looking for 3 touch points. If it's really clean and controlled, then I am looking for a minimum of 2. All right, I'm watching this bar here for potential continuation. We've got 35 seconds left here on this 2-minute bar. Now, what I can't see here is a wick back inside of this little channel, this little ascending resistance. I know bears are watching that, and I want to put any of their hope to rest before I would enter long on a continuation in a range market. So we've got 15 seconds. We'd have to see a push up well outside of that channel. But right here, the bears are clearly seeing this, so I can't enter long unless a lot changes here in the next 5 seconds. I am ready. Here comes the rollover. Nothing there. You see the bears are seeing that. They're trying to short. They're pulling confidence out of that little ascending resistance. And when I'm entering continuation, I want the other side to have as little confidence as possible. Which here they have plenty of confidence. All right, 50 seconds left on this 2-minute bar. Same idea applies here, by the way. I mean, you can see the bears are just, they're staring right at this. They're getting a lot of confidence from that. I can't have that. I need to see that break if I'm going to enter long on a rollover. Next data release, there's nothing at, I mean, the U.S. Treasury Secretary is testifying at 9. At 9:30, we get EIA crude oil. That's Central Time. Again, this is futures, so around here, whenever I say time, know that it's Central Time, and just adjust for your time zone. Futures, Chicago's the hub. So we deal out of Central around here. Let's see if the bulls can kind of lay the bears to rest here at this ascending resistance. Okay, so this little ascending resistance level, it becomes really tempting to trade it, right? I mean, look, here at the 2-minute. It's like, wow, that's so clean, right? Well, this rejection here is what I would call mushy. It's not nearly as strong as the last couple rejections that were, yeah, granted a little earlier in the day, more volatility. But it's mushy. That's the only way to put it. Now, it's already a lower probability trade to take to short in ascending resistance. Same as buying a descending support. The timing has to be better, and you need the market to make more of a move in your direction because your timing's likely not going to be perfect for you to be right. So really what I'm looking for here is I would love to see if we continue in a little ascending channel. I need to see an ascending support start to form to start putting on a channel scalp or two, or just a continuation breakout above the trend line, and I would slap a rollover buy on a good continuation bull sequence. Lee in the chat. Lee's been working on some custom indicators for all you guys to use. Nah, Lee, just drop them in the Discord channel. You're adding value. You're not spamming. Yeah, simple trader, what you said is correct. For FOMC, take profit trader is not gonna let you trade it. Apex, they don't have a news rule at Apex. Now, the benefit, by the way, of having a big wide channel like this, when you're looking here, right, this widening out, it causes problems in some way, but the benefit is you can get continuation inside of the channel because it's plenty wide, and it still gives you 20, 30, 40 points of room before making a test of the other side. Of course, the bulls are pushing this back upside, which is kind of shoots that idea in the foot. But it now gives us another potential idea later down the road if we end up forming a little setting support. There's always a lot of trade ideas on the table. It just takes one to set up. So we've got about a minute left on this 2-minute bar. All right, here we go. Here we go. Here's a test of the ascending resistance. I want to see a push through the level. I mean, man, there's just nothing I can do here with this. But one push through the level and a nice clean close near the high of a consecutive bull bar gives me a trade, but that requires the bears to lay down around this area here, which is not uncommon to see. Okay, so the reason I've now drawn this is to... I want to show that this is unsustainable. Channels like this, like a collapsing wedge, of course they're always going to break. Now, which direction they break is a tough call. I would say the probability here is probably slightly higher we break to the downside just because it's a range market, and to break to the upside would require some kind of influx of confidence that maybe wasn't here before, and a reason for bears to lay down. Now, if that comes, I will happily trade it. But I will also happily trade a downside break if we get a continuation setup in either direction. So when wedges, channels collapse like this, they're not going to hold. It's just a matter of waiting to see which way they break and then trading the result. Oh, while we wait for this to break out, I actually have a question for you guys, because I know a lot of you guys are having YouTube issues here today. I'm telling you, it's not on my end. I think there's a YouTube server thing going on. I have a question for you guys about the stream. Ready? And I'm still watching the chart, so don't worry, we're not going to miss anything. There are two options that I've been going very much so back and forth because there's problems with each option. You can stream on YouTube. I know most of you guys aren't going to know this. You can stream at either 1080p. Well, you can stream at any resolution. But if you stream at 1080p, you can do what's called ultra low latency, which is like a 5-second delay. However, YouTube gives you their old bad encoder, which means things are kind of blurry. The numbers are a little harder to read. Things don't look as nice. And to me, I think that's important to be able to see it. Or you can push more bits and stream in 1440p, which a lot of people you'll see do, like gamers, where latency is kind of less important. And the latency goes from 5 seconds to somewhere between 5 and 10 seconds, which is not the end of the world. But YouTube gives you a much better encode, which usually, I know not today, usually makes the stream smoother and look way nicer. Not just because the resolution bump, because they're better, newer encoder. What is better? What's better? Worse quality, slightly less delay, or as is? I can't decide. I've been going back and forth. We've got kind of a mixed bag, as expected. I was streaming with the lower delay in 1080 for a little while. But it's tough. It's tough because I wish YouTube, if YouTube would just give you the better encoder for the 1080p ultra low latency, which is like 5 seconds, I would do that all day. Now, I'm hoping in the near future, YouTube will get fast enough at re-encoding everything, because they re-encode everything, that with that I can just send 1440 or even 4K, and they'll re-encode it and serve it to you in whatever quality your internet can handle with like a 3-second delay. That is my dream, but that's me nerding out. I know it doesn't really matter to you guys. All right, we are probably gonna break out of this channel in the very next few bars. At least I would hope so. And then we can start doing something here. Goodness. All right, so take a look here. We should really look at this chart now. You can see that we're attempting a break downside on the 2-minute upper right of your screen, right? Let's see if the bears can take this lower. I would really prefer that they do here, because the way that this market's moving right now is kind of useless to us. So I'll tell you what, I'm going to grab coffee. I'll be back in 60 seconds. Don't go anywhere. All right, we are getting a little attempt at a downside push here. Come on, Bears. Let's just sustain something. Again, if you are just joining us here, movement heading into FOMC is always a little bit weird. It can be kind of wicky. Doesn't mean you shouldn't trade the day. I always still show up on FOMC day and trade as normal. You gotta understand, it can be a little wicky because things get priced in usually a little early. Okay, now if we see a nice clean push, we're testing currently this ascending resistance. But if we can see a nice clean push up outside of there for a clean continuation sequence, then things change for us, don't they? Meaning we can get a setup going. I'm gonna go ahead and delete this, just clean things up. And we should probably go ahead and draw that, at least to start. Okay, so this channel has now kind of cleaned itself up. Let's see if we just push higher, which would also be a setup for us. So we have a lot of options here right now, just needed to give us something. Now remember, 20K, that's an S tier level. It's 35 points away as we currently sit. All right, if we get a downside test of that ascending support, not on like this bar, by the way, or even the next bar, because that would mean that we got news most likely. We get a nice controlled downside test of that ascending support, I would take a buy. Or if we get a continuation sequence pushing up through the ascending resistance, closing at or near its high, I would also take a buy. Now we can also see it break downside, but we'll cross that bridge when we get there for a continuation sequence to the downside. But here, those right now are my two ideas. And I'll take whichever one sets up first. Yeah, Zach, we got EIA crude oil coming at 9:30. That would be quick for one of these setups to hit. If it did, I'd have to make that decision. And I'd probably have to hold off because that's usually 60 to 120 seconds worth of volatility, the EIA crude oil. But once that comes and goes, it's not that big of a deal. So both those setups on the table ideally would hit just after crude oil volatility's gone. Which, by the way, if you're not aware, in 2 minutes and 20 seconds, we get EIA crude oil. Which is going to cause a little bit of volatility, but nothing like FOMC. All right, we are currently making a hard test. You can see we're kind of getting pinned right against that ascending resistance. A lot of times these little pins can make an attempt at a break. Let's see if we can get a nice clean push and hold is the more important thing. We got 120 seconds. I'm sorry, we got 1 minute and 20 seconds left on this 2-minute bar. Which could give us something good if the bulls can push through and the bears start laying down. which is the big thing. We need the bears to kind of give up here. All right, we are 50 seconds out here from EIA crude oil. Thirty seconds. Not a lot of volatility there. Okay, crude oil has hit, and really not a lot of volatility at all, which is good. Okay, now, again, next up, we have a White House press briefing at noon. This is all Central Time. And we have the FOMC interest rate decision at 1 o'clock, and then Powell speaks at 1:30. Yeah, it can cause a little bit, but it's usually gone within 60 seconds, and usually it's if any of the other markets were affected. Still testing this little ascending resistance. All right, beautiful. We're getting a push. There's a new bar. You can see on the 5-minute chart, these channels like this, they're just unsustainable. They tend to break. And again, which way it breaks, I would say is on an average aggressive channel like this, whether it's ascending or descending, it's usually going to be like maybe slightly weighted in favor of the inside. So in this case, it would be like a downside break, but we'll see what we get. We're testing that upside, but the bears are still stepping in, causing us some issues. Now again here, top right of your screen, at least top right chart, If we do get a back test of that ascending support, assuming it is a clean, controlled test, I would take that. That's a clean trade for me. But it would depend on how we come in, if we end up coming in at all, because we are just pinned at the top of this little channel. All right, that little ascending channel currently would be a test of about 940. And yeah, that would be, well, it would arguably be the fourth, but I would call it the third. But the first two were so clean that we had that conversation earlier in the stream before this even set up. I take the third only if the first two are very, very clean. Which in this case they are. Yeah, MIT's ATR. ATR currently sitting a little below 20, 19-ish. Yeah, which is low. Again, my ideal range for average range of a 2-minute bar is 25 to 70, and currently that average is 19. Which is not the end of the world. It just means that for me, I have to lean a little bit more into negative reward to risk, which is fine if you can get setups going. But this is kind of exactly what we were talking about at the beginning here. Hanging out in between the break-even point of the day on the Nasdaq, which is 19,875 and 20K. It's a 125-point little range where volatility is bound to kind of collapse because no one knows what to do. Which for trading is not ideal. So we literally just had this conversation. I would like to see us break one way or the other, either above 20K or below 19,870 and just go. But until then, we just got to trade the setups that we can get inside of this little channel. That's the 10 2-minute bar ATR. right. Market trying to push lower here again now. That little ascending support level. Updated is like 19,943-ish. So that's what I'm watching. We have 55 seconds left on this 2-minute bar. And I don't want to see just a giant push down to that level on a single bar, but a couple of bars, a controlled test into that level would be beautiful. Volatility, oh man, it's just collapsing. Volatility is still holding at 19, but if you look at the last couple bars, I mean, the last bar had less than an 11-point range. Yeah, I mean, Daniel, I'm kind of with you here. If we could get a Trump post or something, just get this thing moving. You know, when the market's really volatile and people, because if people know that you trade, which, I don't know, maybe you keep it to yourself, which is probably a good thing. And they start asking you with a lot of volatility because they turn on, you know, Fox Business or whatever, and they see that the market's tanking or skyrocketing or whatever, but especially when it's tanking. And they come to you and they're like how are things all right? Like, how are things going? Those are the best times. I've gotten those comments plenty of times, and what I always say is, when the market's moving, don't worry about me. When the market's dead and it's going sideways, that's when you can rest assured that I'm frustrated. Because it almost seems like they kind of want that. Okay, the updated level is going to be about 45. So we got 1:15 left on this bar. So calm down, bears. Take your time. But I will get ready here. And I'll show you this level here. So of course, it's going to be creeping up. So right now we're looking at maybe 45, 46. Next bar will be 47-ish. That's what I'm watching. All right, bears, take us a little lower, down to 47-ish. And I'd take that. That'd be a nice little trade for me. But, you know, ATR is so low, I'd have to lean into negative reward to risk. But let's just worry about getting an entry now. All right. Get ready here. Nice little test of 48-ish. And I can place that. Plenty of time left on this bar. Got 1:12. Yeah, gains. That's an aggressive level on the 5-minute. 2 minutes a bit more, it's a bit more controlled. We should probably actually make a little adjustment here. I'd probably draw it that. All right, 20 seconds left on this 2-minute bar. Again, if we get a test right as the bar rolls over, you guys know I hate that scenario because it leaves you with a rollover, and now the bulls trying to buy it back up are like, wait, there's a trend line in the way on the retest. Right, because I know that a lot of people have it drawn. This has been so clean that almost everyone's going to have it drawn the same way, which is why I'm willing to take the third touch. because it is so clean. But I don't like to enter channel scalps on the rollover of bars for that reason. I prefer to enter in like more like the middle of the bar. All right, a little test of 49, and that would be an entry for me. All right. "45 seconds still on this bar. Bears, come on. Just give me a little bit of a dip test." 49. See, the bulls are wicking back every single bar. All right, this bar is rolling over here in about 6 seconds. Okay, good. No push. Again, I hate when the rollover comes on the test. All right, limit order out there, and I am filled. All right, so we're sitting long here on that test. We'll see if that ends up working out here. My average price is 19,951.75. A couple points in the money as we currently sit. Filled in all the accounts just fine. All right, take profit up at 19,991.75, though I would manage this one a little early, probably about 20 points. Because again, ATR is so tight, I have to lean into negative reward to risk. I have not really much of an option here, at least for me. And stop is down at 19,911.75. 3 points in the green. All right, bears are trying to push us down through that level. Let's see if they can end up putting together a little bear continuation. Really, the only reason that I ever have to manage a trade early, because by the way, we're currently testing the 5-minute 20 EMA to a T, to manage a trade early on the losing side is if we get a sequence that sets up that I would enter if I were flat in the opposite direction of the trade I currently have on, if that makes sense. Currently about 5-6 points in the red. If you guys haven't done so yet, I know a lot of you guys do it right away, and I appreciate you doing so. Leave a like on the stream. Helps out a lot. Thank you for doing that. All right, there's a bear push. Look at that. Currently about 14 points in the red. All right, bears are moving here. This looks to me like we may end up seeing a bearish continuation sequence setting up. Pushing through the 5-minute 20 EMA. Getting some volatility going here. Big push. Again, stop at 19,911.75. Stop out here is highly probable. We'll see if that triggers us. Big downside break. There we go. We will get stopped out there. Make sure I'm fully flat. All right, we are stopped out there for a 1R, of course, loser. All right, let's keep looking here. We got very close to getting, a scenario where I would have had to manage a loser early. We never quite got there. So again, if you're just joining us here, we have FOMC at 1 p.m. Central Time. And if you're trading take profit trader, you got to avoid that. They don't let you trade that. But Apex has no news rules. All right, so that was a good breakout of that channel. Even though we took a loser there, I'm cool with that because that was a good breakout. So let's clean up our chart and see if we can get another setup going now that volatility's increased. Big push we've got. These are some outsized bars. All right, let's see if we can get a nice close near the low of this 2-minute bar. Right there at 19.9. All right, well, I'm going to give it 15 seconds here. Give me a little bit of a back test. All right, and that's another good setup for me, so I got to put that on. We are now sitting short in all of the accounts. Average price is 19.9 on the dot. Stop up at 19.940. Take profit down at 19.860, which, by the way, if we take a look here, 19.860 is right in the stop hunting territory, which is on purpose, by the way. So we are going hunting here today. 14 points, 15 points in the green. Let's see if we can get some nice continuation, take out those little stops at the low. Good little stop hunting trade here. When you get clean setups back to back, you got to put them on, regardless of the outcome of the first setup. Kind of bouncing around here, 15 points in the money, 17 points in the money, 19 points in the money. And some good volatility going. About time, right? All right, we are over 20 points in the green now. $26 points in the green. Gonna take profit down right at that stop hunting area at 19,860. Let's see if we can get a push through 19,860. Ooh, getting hung up right at those lows. Got a couple ticks away from the take profit. There we go. And we are out there. And we are flat for a winner. Goodness, look at that push. Finally, he's getting some good volatility. Which, okay, that's a 1R winner. We took a 1R loser a little earlier, so we're pretty much break even. I mean, my 1R right now is like 3,200 bucks. So with slippage on the first trade, here, I'll just show you. With slippage on the first trade, see if this will pop up right. There we go. We're down like 250 bucks, which is like break even. So let's see what we can keep getting here. With FOMC, the closer you get, it can start to get a little more volatile, but that's not a bad thing based on this morning. It's still moving here. It's 20 points now past our take profit where it was. What a beauty of a move. God, you gotta love it when you get those wicks up top here. Sorry, here. And all of a sudden now you get this good volatility. Really not even off some, at least not that I'm seeing. Not off some clear headlines or anything. Market just feeds on itself, which is, it's like, finally, right? But a nice continued push here. Beauty. Scrumptious says, holy shit, that trade got me my first funded. Cool, good work. Yes, old school. That is a beauty of a setup. That's probably about my favorite setup too. When you get that nice continuation sequence lining up just perfectly with a stop hunting mentality, near within like 5 to 15 points of your take profit. Just a beauty. Look at this push. Goodness. Panther says, has to be some kind of snapback. Okay, now. We're in a range market, okay? So at some point here, the bulls are going to step in and try. That doesn't mean they're going to succeed. They could just get run over. But that mentality of, you know, well, there's got to be, we got to bounce, right? That, if not managed perfectly, that can kill you. If you're gonna take those trades where it's like, which by the way is reasonable. You're like, okay, well, we're in a range market. Here's a huge move. Let me just get long. Understand, please, that that's a low probability, very high reward to risk trade, and manage it as such. Those are not trades that you should just hold without a stop, because that can kill you. Go and counter trend like that, assuming. Because who knows? There might have been news that you missed, right? But here we go. Here are the bulls stepping in like we just talked about. They're trying. Let's see if they can succeed. Getting a nice little attempt at a reversal sequence here. Jeff says, would you enter again on another growing red bar closing near its low at this point? You asked that maybe a couple minutes ago. You know, Jeff, if we were in a trend market, the answer to that question would be yes. However, in a range market, like looking at the 5-minute, I gotta tell you, with this here, I have to say no to that unless we were to break even lower. Which a lot of people are like, that doesn't make sense. But you could have taken a short at a better price. Yeah, but at the better price, the bulls had an argument, which they're now taking advantage of, at least trying to. Again, we'll see. All right, I will be back in 2 minutes. All right here. Well, it doesn't look like I missed much, but came back at just the right time. We got a couple of sad attempts at bull bounces, and now the bears are just taking us lower and lower. All right, now worth noting here. Yesterday's New York session open was 19,796, which we are coming into. So let's keep an eye on that. I know some bulls are going to be looking for anything they can possibly get their hands on for confidence here at this point, and that is one thing that they can look at. This is really common here. We've been seeing this a lot. Again, we're in a range market. Bigger picture, right? I mean, you look at this, it's very obvious. But what we see a lot lately is, especially here on like the 5 minute, you get an aggressive move, whether it's down or upside. And then oftentimes you start to see it still is moving the same direction seemingly, but it's starting to flatten out. Okay, the bulls are now stepping in, getting in the mix a little bit better. Okay, so that doesn't mean, and by the way, my preferred sequence here would be a descending channel. I mean, that'd be a beauty. You can't just expect the thing to move lower and lower all day to the same extent, right? Eventually the bulls step in, gain some confidence because they're like, well, hey, we're in a range market. This isn't going to last. And usually they're right, at least to the same degree. It's not going to last of that downside push. But that was actually very good. You look up top, that ATR, I mean, we were getting down there. We were seeing 10-point range bars, which is very frustrating. But ATR is now creeping up to 27, which is back in our range of 25 to 70, which is good to see. Peter says, when ATR drops like that, you know the market is cooking up a huge move. Well, we hope it is. Don't always get it. Alright, now let's talk about this little channel. Here, we'll go here. Now what's everyone looking at, right? Well, I mean, clearly it's going to be something like this. Don't overthink the trend lines. Just draw it how everyone else will draw it. This channel here is about 40 points wide. So, 3 scenarios I'm cool with. Either a breakup, a hard breakup, or a hard breakdown though a hard breakup in a range market I could make more sense of and probably take more trades on. Whereas a downside push starts to, I think, confuse everybody, and buyers, sellers maybe stop getting short or start taking profit, adding buying pressure because they're like, why is this happening? It's a range market. Or if we can get a nice push downside here, then all of a sudden we have a great argument for this little descending resistance. It is relatively aggressive, but so is this entire move. Those are my three preferred things going on right now. See if we can get one of those setting up. Willie says hard break down first. Yeah, let's see if we get that. Gotta tell you, we have a little bit of a... You can make the argument of a flat bottom as well here. Flat bottoms tend to break hard. But you could also make the argument for a flat top. A lot going on right now. I think there's a lot of indecision in the last 10 minutes. I mean, I know that sounds like an oversimplification, by the way. Here's a push, an attempt at a push downside, but that is the also the test of the descending support. We'll see if the bulls can step in and hold that. It sounds like an oversimplification to say that the market can get kind of confused, and that leads oftentimes to a certain kind of movement, but that really is what's going on. I mean, it's all just market participants and then algorithms trying to figure out what are humans going to do here. So, in a range market with really not a lot of news, I know there's a little Apple news, whatever. If all of a sudden we got a huge continued downside push, I think that confuses people more than anything. Again, shorts are like, I don't really see a reason for this. Let me buy it back. That's buying pressure. Buyers, bulls, are like, I don't really see a reason for this. Let me average down. That's buying pressure. I see less of an argument for people, the bulls, I should say, or any buying pressure, whether it's shorts closing or bulls opening. I see less of an argument for them laying down than I do for them stepping up. In a range market. In a trend market, it's kind of the opposite. I am interested in a little channel scalp here, by the way. If we get a controlled upside test of that descending trend line, right there. It's a little of an aggressive trend line again, but the move was aggressive as well. So it would have to be controlled, though. And then I'd likely end up leaning a little bit into negative reward to risk. Quite get a full-blown test here. Looking for more like 829, 830. Nothing quite yet. We got very, very close. We didn't quite give me an entry. All right, we've got 20 seconds left on this 2-minute bar. Again, I'm not a huge fan of entering a channel scalp right on the rollover. It causes problems because you end up rolling over on the other side of the trend line. And then, you know, it just confuses everybody like we just talked about. So if we can get a nice rollover here in a couple of seconds, here it comes. There's the rollover and then a little test. 26-ish. Very close. All right, there we go. And I will enter there on that test. Average is 19,825.50. I'm sitting short. Stop up at 19,865.50. Take profit down at 19,785.50, though again being a channel scalp with about a 35-point channel and not huge ATR. It's not unlikely that I lean into negative reward to risk here and take this off around 20 points. We'll see. All right, and I will. I'll slap that take profit at 805.50 and see if we can get a nice little pullback and a fill. Currently about a few points in the green. All right, there's a bull attempt here. $11 points in the money. Still a minute and 8 seconds left on this 2-minute bar. There we come in for a test. Got within about a point of my take profit. About 4 ticks. Again, with lower ATR. It's at 25, right? But it's not, 40. Making a retest up here. Couple points in the red as it sits. Break even. So we did. We got within 4 ticks of take profit at 805.50. I'm going to leave that there. Let this work. See if we end up with a bull continuation sequence forming. Otherwise, we'll see if the bears end up slapping this back down and fixing this for me. bit of a pullback on that wick. Not a great bull close. You can see the bear is stepping in a little bit on that rollover. Back to break even on the trade. Few points in the green. It's at about 8 points in the red as we currently sit. Break even on the trade. By the way, we are kind of coming into a retest of that initial trend line. Back to green on the trade. Kind of hovering right around that break-even point. All right, 5-6 points in the money. $10 points in the green, 12 points in the green. And take profit at 805.50. See if we can just get a little bit of a push below the wick of that one bar that took us within 4 ticks of our take profit a few minutes ago. The bulls are trying to hold up that the retest of that little descending resistance. Just need about 2 more points, 3 more points. Yeah, bulls trying to hit it back up. And there we go. We are out there at target for... Ooh, we didn't get the best fills. We did not get the best fills. So that was a 0. Well, actually, it wasn't. We didn't get good fills, but it wasn't the worst. Okay, so recap so far. First trade of the day, 1R loser. Second trade of the day, 1R winner. But due to slippage on the first trade, it left us down $250. Right now, 1R for me is like $3,200. So that was a 0.5R, actually slightly less because of not great fills winner. So after that puts us up. So we are currently up, let me do some math, like 0.4R. So we're a little in the green. Listen, I'll take it for now, but I'm not done. We'll see what else we can kind of slap on top here if we get some more setups going. Not done. But remember, we have FOMC at 1 o'clock. Which, again, I avoid from 12:45 to really 1:45. So 1 hour out of your day. What big deal, right? All right, so think about this here. It's kind of tight. Go trade. Yes, I am live every day, 8:15 a.m. Central Time, which reminds me, if you have not done so yet, please like the stream. Helps out a lot. I started doing streaming maybe... I started the lives a little over a month ago, I think. Maybe 5 weeks. I appreciate you guys hanging out every day. A lot of regulars. All right, so we are definitely in a little bit of a range here. I'm just curious to see which way this market decides to break, and then I'm open to take in whatever setup the market presents, whether it's another channel or a continuation would be great, but continuation with room inside the channel would be ideal. Yeah, Zach, I'm looking at continuation to the downside of this little descending support. That would be about this level. Kind of aggressive, though, I gotta tell you. But I am looking at that. However, we didn't really get a clean setup. Small, kind of shrinking bull body. Right, I mean, if we zoom in. Kind of shrinking bear body here with a wick back. So, not really clean enough, but I am watching that same idea. Shato, Nico just tuning in. How we sitting? I've taken 3 trades. First trade was a 1R loser. Second trade was a 1R winner. Left us down like 250 bucks. Which is basically break even because of slippage, and then we took a 0.5R little scalp for a winner. So we're sitting up 0.4R, which is like 1,200 bucks. See what else we can grab. Nico, do you give the Qs any thought when trading the Nasdaq, the NQ? No, not in the way that you're asking. They're essentially the same thing. In fact, I'd rather just watch the NQ. Yeah, Google Alphabet is moving. Goodness. Scooby says that flat bottom is around the level you mentioned earlier. What was that? Yesterday's open? Yes, yesterday's open was 19,796, and this flat bottom is right around 19,796. Now, 19.8 itself, that is going to be what? A tier 3 level. So I'm not too worried about 19.8 on its own. I would think that that's more looking at the bulls are stepping in and saying, what do we have here to give us some hope? Oh, yesterday's open is right here, and they start buying. Because everyone knows that right now it's a range market. So expecting that this move here would continue until the market, without interruption, until the market was down 5% on not really that much news. I get it a little bit, but not that much. I think is an unreasonable ask to make of the market. I don't like to make unreasonable asks of the market, because then you just lose money. You gotta, use your brain a little bit. The bulls are probably gonna step in here because everyone knows it's a range market, and that's unreasonable to ask the market to do that. So they find a level, whatever's in sight, and you oftentimes see bulls starting to step in or average down or shorts cover down in that region. The opposite, of course, to upside moves. Now, trend markets, entirely different story, but we're not in that right now. So, this is one of those, if you look just here, right, like here, this is one of those regions that a lot of people look at and they're like kind of confused. Well, when you're confused, usually you're in a range. Okay, so you could make the argument that, well, we still have this level here. We also have kind of a flat-ish right in that region. So let's see if this ends up breaking. Now, when you draw that, all of a sudden you look at it, it's like, oh my God, obviously. Right? Obviously, we're in a trading range. I didn't even see that. Because you're still thinking that it's kind of descending because we have this level drawn. I would say we're just in a sideways range right now. And sideways ranges with flat bottoms and flat tops together are 50-50. Straight up. So you got to wait for them to break. Nico, what platform do you use? I'm starting to like it more than TradingView. This is Thinkorswim. I have used it for years. I'm just comfortable with it. A lot of people are like, oh, Thinkorswim, it looks so old. I think it looks fine. I mean, I kind of get why people say that, but I like Thinkorswim. I've used it for years. And Sosnoff built it, and he's the OG, so I like Thinkorswim. This is NinjaTrader. Yep, so this is a flat little range here. Again, these are 50-50, guys. I just got to wait for this to choose a direction. And then once it does, we can start taking setups again, but trying to trade inside of this, especially trying to like buy these flat bottoms, sell the flat tops, the probability is just different than like a clean ascending support or a clean descending resistance. It's different, it's worse. It's a lot more 50-50 kind of up in the air, so I just wait. I gotta wait. Curtis says, it's tough for me to short a bottom. I understand that. Buy low, sell high mindset. This is a really tough shift that I think people need to make for futures. Buy low, sell high scalping, which is a term for channel scalping, scalping within a range, makes all the sense in the world, and you see me do it when we're in a range. But for me, continuation scalping makes way more sense when we're making a continuation move. When the current balance of buyers and sellers is really tilted. At that point, like buy low, sell high. Well, when you're not in a range anymore and you're kind of making this move, what does buy low even mean? Right now here, buy low, sell high is a much better mentality than continuation until we see a break and then things change again. But that's a really tough change I think people need to make when they trade futures, because they're so efficiently priced that you get both scenarios all the time, where you should be thinking buy low, sell high mentality or sell high, buy low mentality, until you shouldn't be. And that's why we talk every morning about market inertia on the daily chart, because you have to make that distinction. And the quicker you can make that, the better you're going to perform. All right, now, I hate to do this, but I just want to point this out to you guys. I don't like to have my charts get all messy like this, but there's an argument that if we end up seeing like this, which we're already testing, then we could get a push and we end up breaking the downside of this and pushing lower. That's not something that I can take a trade on. I just want to make sure you guys are kind of seeing what I'm seeing. But still, inside of this channel here, flat bottom, flat top, it's still about 50-50. I'm just saying it wouldn't surprise me if the bears step in and see that, and they're like, yeah, we're going to reject there, and they take it lower and end up breaking this to the downside. So we'll see how this plays out, but either way, I gotta wait for this thing to break one way or the other. I don't care which way it goes. All right, here we are, coming in for a test of that flat top. Bears failed that little descending resistance, at least kinda. So we're coming in for a test of the flat top. If the bulls can push us through. Again, if you're just joining us, this is where we're looking. This little sideways channel. These things are 50-50, and they need to break one way or the other. Once they do, we can get back to it. All right, here's the test. Right at 45-ish. Here's the test. Five-minute 20 EMA is at about 63, so keep an eye on that as well. All right, there's the bulls attempting to break out of this little flat top here. Here's all the looks. You can see the 5-minute, that 20 EMA is right about there. But bears are going to see that and try. They're going to try to hold it down. Let's see if they can. Which, by the way, as traders, we wouldn't really want the bears to step in because that just delays the breakout. Well, there's the rollover. Close outside of there and a rollover. Bull's still trying to push. And about 10 points away is that 20 EMA on the 5-minute chart. Here's the retest. Very common to see. Okay, now, I know a lot of you guys are probably looking at that 2-minute chart top right and you're thinking, if we can get a growing bull bar continuation, question mark? Well, look at that 5-minute 20 EMA. It's kind of in the way. I need to see it close above that for that to be on the table. And not by like 2 ticks. At least a few points up and above that 20 EMA on the 5. Because that is a psychological level. As much as, you know, it doesn't have edge to just trade off EMAs, enough people watch it for it to be relevant. See, well, here's the retest. Bears trying to break it back down into that channel. You can see the shrinking bull bars, a little bit of a doji, and now the reversal attempt. This is an attempt at a reversal sequence out of the bears. Let's see if they can get that done. Now, by the way, starting yesterday, if you're looking to scale your accounts out, for me, I think for scaling, Apex is your best bet. They just brought it up from 50% off to 80% off single day pass with code BIG. If you're someone who likes daily payouts, however, Take Profit Trader is a hell of an asset to have some Take Profit Trader accounts. You can take payouts every day. That is 30% off and no activation fee, which the no activation fee is really the headline there. If you use code BIG. If you don't use the code, you don't get 30% off, but then when you pass, you have to pay another 130 bucks or whatever to activate the account. That removes that, which is beautiful. So for the lower accounts, I get this question as well. Like the 50Ks, and maybe a little bit higher than that. Take Profit actually ends up being cheaper, believe it or not, with daily payouts. The higher accounts, if you can pass in one try, then Apex usually ends up being the better deal. So I think it kind of depends on if you're trying to scale, if you're trying to get daily payouts, plus the account size you're going with which one you go with. But for me, I think mixing the two is probably just a better bet. All right, now remember, as far as news here, we have a White House press briefing at noon Central Time, okay? So keep an eye out for random tariff news coming out around an hour and 11 minutes from now, starting then. And then, of course, at 1 o'clock, we have FOMC, the interest rate decision, okay? So here we are. We are now making the test of that downside flat bottom. Right, which we just talked about not too long ago. The bulls failed at taking it higher. The bears succeeded in that little reversal attempt. Now let's see if they can succeed at breaking us out of this channel. Big hard test here. There's the rollover just kind of at that flat bottom again. This is what I mean when I say these breakouts of flat bottom, flat top, totally sideways channels, they're just straight up 50-50. And a lot of times the tests are kind of sloppy, so it's just, I don't think it's so easy to find edge in trading these kind of tight, flat channels. I think it's just worth waiting them out, waiting for them to break, and then getting back to work. Might as well extend this out, huh? Pull that out to there. All right, here we are. Bears attempting to take this guy lower. See if the bulls step in and just do another reversal sequence. They're trying. Bulls attempting a little reversal sequence here. Again, you get to the edges of this little channel and the other side gets some confidence. I mean, come on. Come on, this is why it's really important, again, to understand when you're in a range market. It's all about the confidence of the other side. You just look at the sideways action, and all I think is, how many people out there are just betting on breakouts constantly in a range market and getting burned? Getting burned every time. Look. Oh, I'm going to get long. We're going higher. Nope. I'm going to get short. We're going lower. Nope. Ah, here we go. We're breaking out. Now I'm going to get short. I'm going to get long. You can be wrong so many times in a row just by simply not understanding the market inertia at that very moment. You need to look at the day, well, really like the week-to-week market inertia, like here, like we do every morning, and then understand what's going on in the last hour, 2 hours. Make the market prove itself to you if you're going to take some kind of a breakout bet. Nope, Zach, I don't trade channel on flat tops and flat bottoms. The probability is not good enough. It's just not good enough. We are still having trouble on this little channel here. Goodness. Chris, scalped a few points on these bull bars to pass my first Take Profit Trader 50K eval. 2 more to go, then adding the 150K big boy. Good work, Chris. Good work. Yeah, listen, those Take Profit Trader, especially the Take Profit, any funded account, but especially the Take Profit Trader accounts with the daily payouts, it's such an asset. You make money, you can request a withdrawal, goes to your wallet, and whenever they approve it, you can pull it. It's just such an asset. Especially like multiple, or if you get 5, like 50Ks, 550Ks. It's a great setup. All right, just waiting to see which way this breaks. Now again, be aware, we have a White House press briefing in 58.5 minutes. And then FOMC at 1 o'clock Central. Well, small green so far here on the day. That is 0.37 or something, 0.4 R green on the day. Again, 3 trades so far today. Started off with a 1 R loser. Boom, down like 3,200 bucks. Second trade, 1 R winner. Got us almost to break even, like 250 in the red. That's pretty much break even. And then we took a negative reward to risk little channel scalp. Puts us up like 1,200 bucks on the day, which is again 0.4 R. So we're sitting small green as it sits right now. Just got to see which way this thing breaks. Again, these little sideways channels, these are tough. These are very tough, and in my opinion, not worth trading. In my opinion, I think you got to wait. Got to wait to see which way this thing breaks. Grab continuation or a little ascending channel, descending channel, but this sideways, this is garbage. I don't think there's much edge to be had in these little sideways movements. Now remember, guys, if you're trading Take Profit Trader, which by the way is 30% off, no activation fee with code BIG, you're not allowed to trade FOMC, okay? So do not be in a trade with Take Profit accounts at 1 p.m. Central or the minutes surrounding it at all. And also, you'd probably want to avoid at least the beginning of Powell's speech, okay, which starts at 1:30. And Apex, starting yesterday, 80% off, single day pass. It's one of the better deals that they run. They do go to 90, however, it's very rare. So 80% is one of the better deals that comes around a little more frequently, but it's not all that common. Again, it was just 50% off. All right, guys, every day, 8:15 a.m. Central. Be patient today. Let the market come to you. Try not to trade the news if you can help it. Again, news is usually 50-50, and I will see you guys back here tomorrow morning, 8:15 a.m. Central Time. If you have not done so already, if you're new here, please subscribe to the channel, and I'll see you tomorrow. All right, guys, have a good one.